Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on Viatris, ticker symbol VTRS. So for today's agenda, we're going to give a description of the business as well as their portfolio mix. We're going to take a look at their product pipeline as well as dividend information. I'm going to talk about some negative price pressures as of late. We're going to look at the stock price, and then I'm going to look at its price performance versus its peers. Lastly, I'm going to give a multiples-based valuation. And finally, I'm going to give my thoughts and a price target for Viatris. Thank you so much for watching thus far. Please consider subscribing, like the video if you find it helpful. Leave a comment down below. Tell me how you're using Viatris. Now back to the content. Now, Viatris is a relatively new company. It is the result of a spinoff of the Upjohn from Pfizer and immediately merged with Mylan. This transaction completed on November 16th of 2020. Now, both these companies were in the pharmaceutical industry, and what really made these a perfect fit was they both mainly focused in generics. They also had brand names, but they have expired patents, and so that's where they fit inside of the pharmaceutical industry. Now, after a patent expires, it doesn't mean the drug is useless. They can still sell that drug as before. But what it does mean is generics can now be produced by other companies using the same chemical structure. And so it increases competition on your brand names that you usually kind of, basically exclusive. You can only buy this drug through this brand name. So once that patent expires, you'll start to see some loss in sales because people can now buy generics. Now, let's look at their mix of brands versus generics. So you can see they had some pretty big brands up there: Celebrex, Lyrica, Viagra, Lipitor, Zoloft. And in the generic section, they're making therapeutics in 10 areas: cardiovascular, infectious disease. And you can read the rest for yourself. And I'm not familiar with biosimilars, and I'm not going to claim to be. Now, it's important for a company that creates generic drugs to keep an eye on patent expirations. And that's what we're looking at right here, is a pipeline of drugs that have patent expirations here in the near future. Here in the near future could be anywhere from within the year to several years off, because it takes a while to get that generic drug approved. So here's what's in their pipeline. Go ahead and look at it, pause it if you want to review it any further. Moving into dividend information, Viatris came out and said that they would be basing their dividend off of 25% of their free cash flow. Now that comes out to about 44 cents per share annually. That's 11 cents per quarter. They came out and said that they would only be doing 3 distributions this year, so only 33 cents for the year. Now, 44 cents over their current share price that as of recording this is $13.40, equates to about 3.3% dividend yield. Now, when they came out with this guidance, the shares were trading around $17, which was about 2.5%. Now, at the same time, Viatris released their dividend information. They also released their earnings estimates for 2021. Looking at their sales, they were estimating $17.2 billion to $17.8 billion, compared to the average analyst of $18.4 billion in sales. So $1 billion off there. Moving on to EBITDA, they were estimating $6 to $6.4 billion. And then compared to the average analyst, it was $7.2 billion. So again, another $1 billion off there. And then when we look at free cash flow, Viatris was estimating $2 to $2.3 billion. And the analyst average was coming in at $3.8 billion. Now, that's a pretty substantial difference, especially in free cash flow. Almost 2x when you compare it to that $2 billion that Viatris on the low end estimated. So I can understand why the stock price declined. So if we kind of look at their stock price over the last month since it came on the market, we can see that right around the time that they came out with their earnings estimates and their dividend news, where there was a disappointment on both those 3 earnings that we just went through, as well as only having 3 dividend payments instead of 4. You can see that the stock price went around that $17 to $18 range and dropped immediately into the 14s, and now it's sitting in the mid $13 range at $13.40. Now, if you've watched any of my videos before, you know I like to do a price performance versus peers, versus industry, etc. In this example, I'm doing it versus the industry and the index. I chose the SPIY for the index. IHE and XPH are the industry indexes I chose. And so this is from the inception of VTRS, November 11th, November 12th of 2020. So you can see that SPY is up 17.5% for the period. IHE is up 4.52%, XPH 1%, and VTRS is performing negatively at negative 14.74% since inception. One thing I want to point out here was VTRS was tracking well to beat the SPY as well as the two industry indexes up until Viatris released their earnings estimates, and they were disappointing from the estimate side. And you can see that quickly took them from beating the market to underperforming the market. Now, in my other stock analysis videos, you'll notice I don't do anything on ratios or multiples. But for this one, I came across an interesting chart that Viatris had in some of their investor materials. And so I wanted to go over it and address it. So what they provide here is a chart with their enterprise value over their EBITDA and the implied share price that you can derive from it. So what we learned earlier was that they're estimating their EBITDA to be anywhere from 6 to 6.4 in 2021. Now, using the calculations I had for what their current cap is and their debt, I came up with what those multiples would be, or what the multiple currently is based off of the 6 to 6.4. So at $6 billion EBITDA, the multiple would be at 6.77. At 6.4, the current multiple would be 6.3x. Now, the reason why I bring this up is even based upon their own assumptions, what I would believe would be that they believe that their multiple should be in at least at a minimum in that 7.5x range. Clearly, they're not trading at that range. They've disappointed even before they've started with what they're prepping investors for on the May 1st call. Now, I don't. Basically, what I'm getting at here is they're probably looking again in that first three columns, the 6 to 6.4, and then even based upon where they're currently trading versus their stock price now. That 7.5x is probably the best. So yeah, that $17 to $19 range seems to be pretty probably what they're assuming what their fair stock price is currently. All right, so here's my final thoughts on VTRS. I think the disappointing estimates that they came out with definitely hurt the stock price. I think that's been factored in now. At least from an earnings perspective, they would really have to miss earnings coming up in May in order for the stock price to get any lower. When I look at their performance versus the market, I also find that a little bit optimistic in the sense that, again, I think they've dropped quite substantially. It's going to be hard to drop lower. They would really have to drop the ball, again, in that earnings season in May in order to continue to drop even further. With that being said, I think the floor on this stock is about $12 a share right now. And I think it'll hit, if it does get that low, it'll hit resistance around $12. Right now it's trading in the $13 range. They're about $13.40. Now on the upside potential, when I factor in where it started trading at, where it was trading prior to the earnings, again, I think if EBITDA is forecasted EBITDA for the year is optimistic and on the higher side, I think we could see that pop up into the $16 range pretty quickly. And I think if earnings quarter over quarter look better and better and look like we're going to get closer to 6.6, like we're going to have a surprise, I think we get up into that $20 range. So again, my estimate on this price, or this stock price, is going to be anywhere from $16 to $20 in the next 12 months. And that indicates a 19 to 49% upside in VTRS. Please consider subscribing, like the video if you found it helpful. Let me know what you think in the comments below. Thank you so much for watching today's video. Frank Finance, out.